Welcome back to this week's dividend portfolio update, guys. Here we are. We are looking at the S&P 500 right here, and the S&P 500 has been on a steady decline all throughout the week this week. So we are going to talk about the S&P 500 this week. We are also going to talk about my portfolio here that I've been diligently building up for the past year, and the portfolio is down $2,500. We're going to talk about that. We are also going to touch on the YouTubers. All my fellow YouTubers that are talking about the crash, and as you can see, if you keep on scrolling down, you're gonna see everybody talking about the crash. Even some of my favorite YouTubers are talking about the crash, like me, Kevin, Graham Stephan, my guy here, Graham Stephan, me, Kevin, and Jeremy. Kevin here. Everybody's talking about the crash in 2021. We are going to talk about that in today's video and so much more. We're going to catch up on the portfolio, share with you what I'm doing with my portfolio, how I'm managing my portfolio through the crisis, and basically showing you my take on what's going on and my moves on what's going on with the stock market currently. So we're also going to touch on CNBC here, and we're going to talk about some of the headlines that are coming through on the stock market as well. We are CNBC and all the news outlets, they'll constantly keep talking about how the market is going down and everything is going to shambles. We are going to touch on all that stuff today. Let's take a look at the portfolio here that I've been diligently building up for the past year and a half, almost 2 years now, and the portfolio is currently down this week. The major $2,523. Now, if I take a look at the overall picture, which is what I like to do with my investments, right? I always like to look at the overall picture and we work our way down from that. If I look at the overall picture, and this is data from May 19th of last year, 2020, and we are currently in February 27, 2020. Now, on this portfolio is geared towards dividend and growth investing, which most of the companies that I have in here, links will be in the description for you to check them out if you are interested in checking those companies out. Okay, I have links for all these companies down below. You can check them out. You can check every single company that is in each and every one of them out down in the description below. But if we take a look here, right, we take a look at the past day, which was last Friday. The portfolio was down almost $400 here, and we didn't earn any money last Friday. If we take a look here at just a week, this is the week between February 22nd and February 29th of 2021. You can see here that the portfolio is down quite hard, $2,500. And at the same time, the portfolio has generated an income here, $20, over $20 here in income. Portfolio generated $20.15. Okay, this is the main thing that I look at in my portfolio, income that is coming in, right? And if I take a look here, we see the 1788 sitting right here. This is dividend that was just paid, to me on the 27th today. Okay, so this portfolio constantly work, whether the market goes up or goes down. The portfolio work and get the job done for me. If we take a look at our performance again, for the week, the portfolio is up $20, and for the month here, we've generated an income of $40 on the portfolio, and we are down a total of $2,900 for the month. If we take a look at the quarter and the past 3 months, we are up $2,000, and for the past year on the portfolio, we are up $8,000. And if we look at all time, which would be pretty much what we have here, $8,700 for all time. Okay, so if we take a look here, we take a look at some of the income. This This is M1 Finance, by the way. I have the link in the description below if you want to sign up for M1 Finance. Link will be in the description for you to get your portfolio started as well. Everything that you need will be in the description. And I filtered this. What I did was filter this by dividend. Okay, this is filtered by dividend. Now let's take a look here in the past. This page right here, we'll take a look and look at the kind of income that have been coming in from all these different companies. We have the ETF here, we have Wall Tower, and look at all the income that have been coming in. This is the S&P 500 high yield dividend. This one paid me $14 this on the 26th. $14 in dividend that came in into the portfolio. This is cash money that gets deposited into the account. And if I scroll here, if I scroll and I look through, you see all of them are all paying on a regular basis, and the income just keep rolling into the account. Now, if I look at all these individual companies, they are all still in business. They're all still in business. What's going on in the stock market does not really bother them. Caterpillar was the stock market being down 10%, 20%. It really don't impact their business. You know, Royal Bank of Canada, it don't impact their business. You know, Citigroup, nothing impacts their business. You know, all these ETFs that are paying me $14 here, the stock market being down does not impact their business. In fact, if I take a look at this particular ETF here, this is the SPHD. This is the one that pays that currently pays me the most in the portfolio. If I take a look at a week here, you can see I got paid $14. I got paid $14.14 here. Now, has anything happened to the companies that are in this ETF? No. Most of you know, the companies and the ETFs are doing fine. They're operating, their business is doing fine. Nothing is wrong with their business. You know, take a look here. Nice little income that came in the past month. You see, every month this generates about $14 for me. If I look at in the past, if I look in the past 3 months, this particular ETF SPHD has generated roughly about $43. And if I currently look at the all-time here, this ETF has generated $124 for me. And this $124 right here, this $124, this is part of it. This $17.88 is part of it. And what I would turn around and do, let me just do that right now. Actually, let me do this right now in front of you guys. This is what I do pretty much on a regular basis. This is what I do with the portfolio. Let me put that right back in, and it buys it for me right there on Monday. Okay, boom, done. This right here is scheduled to purchase. I put that $14 right back into SPHD, put that money back to work, buy at a cheap price because the stock is currently down for me $30. So I put it right in, get it at a cheaper price. But if I look in general, I look at the general trajectory of the stock, everything is doing quite well. Okay, you know, if I even go back and take a look at, you know, a different company, let's say we take a look at a company like Apple, for example. If you take a look at Apple here, let's take a quick look at Apple. So we take a quick look at Apple here, and if we look at the past week, Apple is down $46. Okay, now when I see stuff like this, it gives me a huge buying opportunity. I see stuff like this, my portfolio down, a huge buying opportunity, which that is exactly what I'm going to end up doing again here. I'm going to go in and put the rest of the dividend that I just received, the $3.70 that is left, I put it right into Apple and let it just keep on working and getting the job done for me, because that's how you build a quality portfolio. When you see a bloodbath, when you see craziness like this, when your portfolio is down 5%, is down $2,000, you deploy the money that you have in your portfolio, you deploy it back into the companies that you have high conviction on. I mean, if I just take a look here in the general portfolio, look at this bloodbath. Okay, $1,000 here, 200. It's just all bloodbath. Even ARK Invest got hit out hard, but days like this would be where you go in and you deploy money right back into the market. The portfolio is down $1,000, deploy $1,000 into the market. This side of the portfolio is down, 270, deploy 270. This is down 76, deploy 76, and you get the gist. Just that's how I run this portfolio. And if I take a look at the long term here, we are still up 38% in the portfolio, and I believe this year this would end up probably being at least, maybe we'll end the year maybe 70 or 80% up. Okay, this is how I run this portfolio. I do not let whatever is going on in the market, I do not let it influence my buying decisions at all. Okay, so on the other notes, right, let's take a look at the S&P 500. Let me just point out some few things here with the S&P 500. If we take a look at the high point at this point right here, and we just trying to trace this down and see how the portfolio is doing. The S&P is down 3% in the past 5 days, just 3% in the past 5 days. If you look at the month, and we'll take a look at from the low points all the way to the high wall to where we are right now, we are up 3%. If we look at 6 months, if we look at the past 6 months, we'll take a look at the lowest point here, or even if we just take a look at everything. Let's just take a look at everything here. So we take a look at everything. We are up 8.5%. Okay, we're up 8.5%. If we take a look at a year, okay, because this would include during the coronavirus time. Like I always say to you guys, look, what we're down by right here, it looks like a drop compared to the early times of the coronavirus, when the pandemic hit pretty hard. Okay, look at this. This was hard. Okay, this was hard. Look at the percentage. The 28%. The market went down by 28%. I was, like I always say in most of this dividend update videos, I was buying aggressively at this point. I was buying into the market aggressively, and if I didn't buy into the market and I sold out of all my stocks, look what happened almost right away. Look what happened almost right away. The market went all the way up. Let's say we'll highlight it up to the point that we're at right now. The market went up 70%, almost 71%. 71% on the S&P 500, and people were screaming at this point as if the world was ending, right? This is my thing with humans and human psychology, right? In terms of how people think about the stock market, right? The stock market is a place where you buy ownership of companies. Like, you literally go in and buy a piece of company. Like, I own a piece of Apple, I own a piece of Microsoft, I own a piece of Google, I own a piece of Nvidia, I own a piece of Visa. Okay, on days like this, when I look on the markets, this is the S&P 500 heat map, and look at the market, and you see all these companies blowing down. Procter & Gamble down, Walmart down, Disney down a little bit, Johnson & Johnson down. I mean, Johnson & Johnson literally got approved for the COVID-19 vaccine, the one-shot COVID-19 vaccine. So that means they are going to be making a lot of money in the next coming future. If we look here, Bank of America is down. Like, you take a look at all these companies, right? And you look at it, you're like, okay, they're down, okay, fine. if I bring that back to our everyday regular life, right? When we want to go out to shop for things, let's say we want to go out to buy new clothes, we 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 will literally wait until there's sales before we buy clothes. I mean, most people anyways. Or you want to buy a new TV or whatever, you at least look for sales first, or look on Amazon to see where you can get it at a cheaper price or whatnot. This is how I like to look at the stock market. Okay, everybody keep crying about the market being down just a tiny little, 3%. Everybody and their mother is crying about it. I mean, if I go here on YouTube and I look at, the headlines on YouTube, all my favorite YouTubers, everybody's talking about the market crash. Everybody and their mother is talking about the market crash. Listen, nobody knows when the market crash is coming. Okay? And a little 2% retracement or 3% retracement, a little 2-3% retracement in the stock market is not a market crash. If you take a look at over the long term, look at this. A year, over a long term here, the market has been up 70%, including if we take a look at the whole time, we'll take a look including the huge 40% drop during the coronavirus time, we are still up in the market almost 30% here. If we take a look at 5 years, take a look at the bigger pictures, guys. Take a look at the bigger picture. That's what I'm doing with my portfolio. I don't let temporary things impact my decision in the market. This was the coronavirus. This was it right here. That was it. 32%. And now look at this. It gave us the opportunity to buy back in at 2019 lows here, 2017 highs here. If we just take a look at the market in the long term, since 2016, okay, since 2016, we're up in the market 89%. 89%. We basically almost doubled our money in the market. So long-term investing is exactly that, long-term investing. When you see days where the market is down like this, down hard like this, 30% is down 3%, I look at that as buying opportunity for me to shop for deals. Okay, and that is exactly what I did last week. I went in and bought some stock. As I open my account today to do this, to record this update for you guys, I just realized, I got paid, and then I redeployed that money right in front of you guys right here. Redeploy that money back into the portfolio, and on Monday, what's gonna happen is the $17 that I got paid will go back into SPHD, and it will go into Apple to purchase a little bit more of those companies. That means I will own a bit more of those companies. Okay, all these companies, they are still there, they're still alive, they're still doing their business, everything is fine, they're still earning their money. And the people that have the level head in the markets and they don't get scared and sell out of their stock, they always win at the end. Let's take a look at the Warren Buffett portfolio here that I have in the past week. Let's see what we're looking at in the past week. We're down 3%, and in the past week he paid me 18 cents. Appreciative of that, but we're down 3%. So situations like this, you can just go in and buy. You put in 3%, put in this $79 roughly, put in $79 in this part of the portfolio, just put it in. That is how I like to run portfolio. That's how I like to operate this portfolio. And over the long term, I'm committed to doing these videos for you guys on a regular basis every single week. I'm gonna touch up on some news. You guys can see here, the markets are pretty down hard. But like I said, I look at these situations are buying opportunities, and I use the opportunity to go in and buy a little bit of stock whenever I have the extra cash to do that. If I don't have the extra cash, I just ignore the market dip and just keep putting my dollar cost averaging of $200 to $300 a week that I put into the portfolio, I just put that in on a regular basis, regardless of what the market does. But look at this right here. Look at this news. The House just passed the $1.9 trillion bill. So that's going to go into the Senate. Now, this $1.9 trillion, right, is going to end up somewhere. Okay. This money is going to end up somewhere. It's going to first go from Congress. It's going to go to all the different government departments. Then that money is going to go to local governments. You yourself, you're going to get a $1,400 check out of this $1.9 trillion. When you get the check, you're going to put the money somewhere. Maybe you're going to buy, new Apple products, or maybe you're going to buy a gift for someone. That gift that you're buying is a company that made that gift. And most likely, one of those companies will be part of here. They'll be right here on the stock market. Okay, so all this money that is being pumped into the economy is going to end up in the stock market, which most of these companies right now, they look cheap. Even though they're down quite hard, they are relatively cheap. And if we also look in terms of where the market has been in the past year or so, the tiny little drop that we had here, it's really nothing. It's really nothing compared to the overall move that has happened in the past year. Even if the market drops 20-30%, it's still not much. It's still not much, guys. If you look at the lows from a year ago, we are up 70%. So please don't let the news and my fellow YouTubers. I know we all want people to view our stuff. We want people to view our stuff and stuff like that. But please, guys, be careful. Listen to voice of reasons. Okay, nobody knows when the market is gonna crash. Nobody knows. Even Michael O'Leary here, he doesn't know when the market is gonna crash. Nobody knows, and if market crash, we have governments that are spending trillions of dollars that they're going to give money to people and businesses, and those businesses are going to spend the money, and most likely the money is going to end up in the hands of companies, and those companies are going to be fine. They're still going to be earning their money. Apple is going to be fine. Apple alone earned $111 trillion in the past 111 billion, I'm sorry, $111 billion in the past 3 months. Only Apple, just Apple alone, not to talk about all these other companies. I mean, Johnson & Johnson is going to earn a lot of money, so to be honest, when people start going crazy about talking about the market crash, quite frankly, I get upset, because it leads vulnerable investors that don't know much about the markets. It leads them to sell their stock, fearing that the market is going to crash and all these things. People should just calm down with it, keep calm, have a level head, and just buy more. If you have money to put into the market, buy more. That's exactly what I'm doing. Anyways, with that being said, guys, thank you very much. Appreciate you for watching. I hope you have learned something from my commentary on the stock market. All I can say is keep calm. The market is not going anywhere. The market experiences ups and downs. Nothing is going to happen. Most of your companies are going to be just fine. Like me, most of my companies that I have in here, they are going to be just fine. They're still earning money. There's a lot of money being pumped into the economy. I'm not worried about the market. I just keep on buying and keep on buying and keep on buying stocks. That's all I'm doing. So all I can say is keep calm, everybody. Have a level head. If the market is going down like crazy, it's better to put that money into companies that you have almost 100% conviction in. Like, for example, like me, I have huge conviction in Tesla. So anytime the company goes down like crazy like this, like what we've dropped $1,200, I will be buying more. I'll be deploying more money into Tesla starting next week. I just want to see how the stock respond next week. But I'll be dropping more money into Tesla because this is one of my highest conviction stock. So don't worry about the markets. The market is gonna go up and down. You know, companies go up and down all the time. Don't worry about it. Everything will be great. Your stock portfolio will be fine in the long term. So no worries. So yeah, thank you for watching. Appreciate you for watching. If you like what I do here, consider subscribing to the channel. Consider sharing this video with other people that might like this content as well. You know, I try to bring a voice of reason to the retail investor community. So consider subscribing, like the video, and all that good stuff. Thank you for watching. Until next time, see you later. Have a good one. Bye.